Bitcoin, revolutionizing the financial system. The year was 2008, a time of deep financial crisis. The global economy was reeling, and trust in traditional financial institutions was at an all-time low. Out of this chaos emerged an idea that would redefine how we think about money: Bitcoin. But what exactly is Bitcoin, and why did it come into existence? Today, we take you on a journey into the history, purpose, and vision behind the world's first cryptocurrency. Bitcoin was introduced in a paper titled Bitcoin, a peer-to-peer electronic cash system, authored by a mysterious figure or group known as Satoshi Nakamoto. Published in October 2008, this white paper was more than just a technical document. It was a manifesto calling for a new kind of financial system, one that could operate without centralized intermediaries like banks. At its core, the white paper envisioned a digital currency that would allow people to exchange value directly, without relying on third parties. It was inspired by the shortcomings of traditional banking systems, which had demonstrated vulnerabilities that contributed to the global financial crisis. Satoshi's vision was to provide an alternative that was secure, transparent, and beyond the control of any single government or organization. To this day, the identity of Satoshi Nakamoto remains a mystery. Whether a single person or a group of developers, Satoshi's contributions to the world of finance and technology are monumental. By creating Bitcoin, Satoshi Nakamoto laid the foundation for the era of blockchain technology, a decentralized digital ledger that makes Bitcoin transactions possible. Satoshi's initial communication with the public came through emails and forum posts, in which they described Bitcoin as a response to the failures of the traditional banking system. This led many to consider Satoshi a kind of digital rebel, someone who sought to empower individuals by giving them greater control over their money. In 2009, Satoshi released the first version of the Bitcoin software and mined the very first Bitcoin block, known as the Genesis block. This block contained a hidden message: the time zero, 3 Jan 2009 Chancellor on brink of second bailout for banks. This was more than a timestamp. It was a clear reference to the systemic problems in traditional finance and an indication of why Bitcoin was needed. The core objective of Bitcoin is simple yet profound: to serve as a decentralized digital currency. Unlike traditional currencies, Bitcoin is not controlled by any government, bank, or corporation. Instead, it relies on a network of nodes spread across the globe, each contributing to the security and functionality of the Bitcoin system. Through decentralization, Bitcoin seeks to address many of the issues that plague traditional financial systems: lack of transparency, susceptibility to manipulation, and the potential for unchecked power. Transactions on the Bitcoin network are verified by a process called mining, which involves solving complex mathematical problems. This process ensures that no central authority can alter the record of transactions, providing a level of security that traditional banking cannot match. Bitcoin's decentralized nature also makes it censorship-resistant. Unlike conventional banks, which can freeze accounts or block transactions, Bitcoin gives power back to the people, allowing users to send value anywhere in the world without restrictions. Bitcoin operates on a technology called blockchain. A blockchain is a distributed ledger that records all Bitcoin transactions across a network of computers, nodes. Each transaction is grouped into a block, and these blocks are linked together in a chronological chain. This structure makes it extremely difficult to alter past transactions, providing a high level of security and transparency. To validate transactions, Bitcoin uses a process called proof of work, POW. Miners compete to solve complex cryptographic puzzles, and the first one to solve it gets to add the next block to the blockchain and is rewarded with new Bitcoins. This process not only secures the network, but also introduces new Bitcoins into circulation, following a predictable issuance schedule. Mining is an essential component of the Bitcoin network. It serves two main purposes: securing the network and issuing new Bitcoins. Mining involves solving computational puzzles that require significant processing power. This process, known as hashing, helps to verify transactions and prevent fraudulent activities such as double spending. Mining is a competitive endeavor, and miners use specialized hardware known as ASICs, application-specific integrated circuits, to maximize their chances of success. The difficulty of mining adjusts approximately every 2 weeks to ensure that new blocks are added to the blockchain roughly every 10 minutes. This mechanism ensures the stability of the network and the gradual issuance of new Bitcoins. One of the key features of Bitcoin is its fixed supply. There will only ever be 21 million Bitcoins in existence. This scarcity is built into the protocol and is one of the reasons Bitcoin is often compared to gold. Unlike fiat currencies, which can be printed at will by central banks, Bitcoin's supply is capped, making it a deflationary asset. Every 4 years, the reward that miners receive for adding new blocks to the blockchain is cut in half in an event known as the halving. This process reduces the rate at which new Bitcoins are created, further contributing to their scarcity. The halving also has a significant impact on the economics of Bitcoin mining and often influences the market price of Bitcoin. Beyond being a currency, Bitcoin is increasingly viewed as a store of value. Due to its scarcity and resistance to inflation, it has earned the nickname digital gold. Investors see Bitcoin as a hedge against traditional financial markets and inflationary pressures. Its decentralized nature means that no single entity can manipulate its value, making it an attractive option for those seeking financial sovereignty. Bitcoin differs fundamentally from traditional financial systems. In the traditional model, banks and financial institutions act as intermediaries, controlling the flow of money and charging fees for their services. These institutions can also impose restrictions, such as freezing accounts or limiting withdrawals. Bitcoin, on the other hand, operates without intermediaries. Transactions are conducted directly between users, and the network itself verifies these transactions. This peer-to-peer model reduces fees, increases transparency, and provides greater access to financial services for people who are unbanked or underbanked. Despite its many advantages, Bitcoin faces several challenges and criticisms. One major concern is its volatility. Bitcoin's price can fluctuate dramatically, which makes it less practical as a medium of exchange for everyday transactions. Additionally, the energy consumption of Bitcoin mining has been a point of contention, with critics arguing that it has a significant environmental impact. Another challenge is regulation. Governments around the world are still figuring out how to regulate Bitcoin and other cryptocurrencies. While some countries have embraced it, others have banned or restricted its use. The regulatory landscape remains uncertain, and this uncertainty can affect Bitcoin's adoption and price stability. Looking ahead, Bitcoin's future is both exciting and uncertain. As more people adopt Bitcoin, its utility as both a currency and a store of value continues to grow. Developments like the Lightning Network, a second-layer solution designed to enable faster and cheaper transactions, aim to address some of Bitcoin's scalability issues, making it more practical for everyday use. Bitcoin has also inspired a broader movement toward decentralized finance, DeFi. DeFi seeks to create an open financial system that operates without traditional intermediaries, and Bitcoin is often seen as the cornerstone of this new ecosystem. Whether as a hedge against inflation, a means of transferring value, or a symbol of financial freedom, Bitcoin's impact on the world is undeniable. The introduction of Bitcoin marked the beginning of a new era, one where individuals could take control of their own financial destiny. Created in response to a broken system, Bitcoin offers a decentralized, transparent, and secure way to exchange value. While its future remains uncertain, the core values behind Bitcoin, financial sovereignty, transparency, and freedom, continue to inspire millions around the world. If you're curious to learn more about how Bitcoin works and the technology behind it, stay tuned as we dive deeper into its various components in our upcoming videos.